Hello, my name's Ethan. Make sure to check out my website, ethanwrenn.com. From there, you can find links to all my various socials. I'm continually updating and posting new posts on Twitch, YouTube, Discord, Reddit, Twitter, wherever it is you like to consume your content. Make sure to follow and or subscribe. If you'd like to be notified when we go live next, or potentially stay in the know on any new potential investments we may be talking about at any given period of time. On my website, I have a blog. Go to ethanwrenn.com, click the blog button, the top right corner, and there's a bunch of different posts, whether it be about investing, gaming, technology, web design. There's a lot of different types of content on there, so make sure to check it out. You might find something you like. Here's an example of what one of the blog posts may look like. As you can see, it provides more in-depth information about a lot of the products we cover here on this channel, such as the top holdings of an ETF, if that's what the post is about. Scrolling down, you can see each and every post has its own unique video that coincides with it. And at the very bottom, there's a comment section. You can let me know what you like, let me know what you dislike, provide me some feedback. I'd really appreciate it. In the bottom right-hand corner of every page, there is a Discord widget. If you click it, you are able to view the entirety of my Discord. You do not even need to make an account. You do not need to log in. You do not need to join in order to be able to view it. You can click this little hamburger button at the top left, go to any channel you might see value in, and if there's a chart or a picture that you're interested in looking at, you can click on it. Click on it and hit open original, and it'll open the picture in its full size in a new tab. So the next piece of content we're going to be covering today is SAP. Well, about 11 months ago, we made a video about SAP SE. This is a German company. They're a German company, and they also have a US derivative that makes it very easy to invest in a company such as this. Pretty great company overall, but let's let the video do the talking. Let's see what I had to say about SAP 11 months ago. All right, so this company, ever since its initial IPO, has shown nothing but strength and growth over long periods of time, right? That's over 25 years of consistent growth, no depreciation, no signs of decay, very solid. Now, another thing we like about this company is its dividend. It offers a 1.72% dividend. That's just under that U.S. national average of 2 to 3%, right? But it's better than zero. But way better than zero. We like to see that. That's very good. That's more than like your average index might offer by a pretty good margin. What else do we like? As you can see, we zoom in here. Always make sure we are looking at our time frames. We are looking at a monthly time frame right now, so each candle represents a month. You need to be looking at this so you can understand the general time it might take for one of these runs. Look at the bottom here, right down here. For some of these runs to actually happen, right? Okay. These things don't happen overnight. They don't happen in a week. They don't even happen in a month. But, you know, if you give them their respective times, you can oftentimes see very good returns with minimal management. Right now, again, we're on the monthly. If you look here, we got this blue line, which represents the monthly 180 moving average. Again, this is a consistent set of indicators that we consistently apply to every company that we look at, right? Very objective. I'm not telling you about my opinion of the product. I'm not saying, oh, I like the new game they released. I'm not saying, Pokemon cards are awesome, and you all should all like Pokemon cards too. That's not what I'm saying. We are purely looking at technicals here. Very little room for opinion and bias. So again, that is true. That is what we do on this channel. Don't get it twisted. We're looking at this blue line, the monthly 180. As you can see, it has bounced off this before, and from that bounce, it proceeded to run over 400%. Again, some peaks and valleys here that could have been played, but if you were just looking at that, the monthly 180, it has ran over 400% since the last time it has touched that, right? Boom. Now, currently, yesterday's price is not today's price. As you can see, we have this monthly 180 moving average, and it is sitting on there. It is beautifully sitting there, flagging a little bit. Again, we talked about it in Discord. It was July 15th, right? That would have been right in this candle. Boom, right here. From there, proceeded to run as much as 14%. It's still flagging. Give it time. Like, this is a great opportunity for you guys to be getting in right now, guys. Right? Like, you need to act quick. Like, I don't like saying that, but you guys actually need to. A lot of the things we're going to be covering today, you guys actually need to, like, consider, do you want to be placing trades on this stuff or not? Because the opportunity is presenting itself right now. The markets have come to a low point over the past 6 months that allow us to get into all these blue chip companies, these great companies. SAP even has a deal with a major tech company. I forget if it was Google or Amazon, but allows you to get into these great companies for a amazing value. And as the market rebounds, right, as the market rebounds, you can expect to see these companies rebound just as much, if not way more, guys, right? Way more. Because when an index moves a little, it can result in its underlyings moving a lot. So we want to be scaling into all of these competitively priced companies. I love the pattern on this company. Again, we have invested in them before. When did we do that? It was right here off this trend support. Boom, it grew 43%. We actually told you guys in the Discord, okay, we're getting out right here. Boom, this is what's happened. Let's see if I can pull that up for you guys. The 20th, January, February, March, April 20th, 2021. SAP sold 138. Boom, right up in there. April, right here, boom, on that green candle. Average cost 122. Not bad, something light, but we do like this company. It is a company we have traded for, and as you can see, that was not edited at all. It would say edited, right? It's not. SAP, great company. I expect to see great things from them. Now, what's our current projection? Again, these things will not take a day. They won't even take a week. They'll probably take longer than a month, right? But as long as the current trends continue, we're expecting as much as a 183% gain, putting the price point at roughly $241. $241 current price point for SAP. It's our projection. It's phenomenal. Again, this is something that you'd want to buy sooner rather than later, right? And just hold. That's all you would need to do. You don't need to worry about waking up early every day to see whether or not your position's up or down. You can get out. Nope. It's a very great long-term investment. You could add it to a Roth IRA, a retirement fund, something like that. Very solid. Let's get into the next company. How do we feel? Well, I pretty much covered everything you would need to know quite beautifully. Again, this video was filmed September 11th, 2022, roughly 11 months ago. And here we are checking in a year later, kind of seeing how the trade's going, When we filmed this video, it was at $87.07. It was sitting right on the monthly 180 moving average. Let's see where it's at today, okay? Are you ready for this? $135.36. Very impressive. Very impressive. As you can see, again, made the video 11 months ago. Right? $87.07. Currently up over 58.4% in 11 months. That's less than a year. That's a phenomenal average annual rate of return. That is extremely good. 58.4% divided by 11 equals this times 12. That is an annualized rate of return of 63.7%. These are huge numbers. People would kill to be able to get returns like this. We just covered ePool, 100%. Facebook, over 100%. Here we are looking at SAP, 63.7% annualized rate of return. Do I ever trade on margin? What's your track record look like? Just curious. I'm always trading on margin. You know, given the opportunities there, right? But yeah, you should be trading on margin. You weren't here earlier. Welcome to the stream, by the way. I really appreciate you being here. I really like trading in shares, right? There's, as opposed to anything else, whether I'm going long or I'm going short, I'm always more interested in doing this in shares. You know, there's other types of financial instruments you can use to like gain leverage, whether it be options or futures, for example. But options expose you to so much extraneous risk that's just completely unnecessary. Options are really for people who want to take on leverage, more leverage than they have the money for, really. That's how I feel. Again, you have to worry about, you know, theta. You have to worry about all these other types of like variables that become entered into the trade. That's just completely unnecessary. You can completely avoid this. There are other ways to attain margin or increased exposure to these assets, and one of which is margin, right? And I feel like margin is a great way to leverage your exposure to certain assets at a relatively competitive cost. They also have like new single stock ETFs that allow you to gain leveraged exposure to a specific company, typically like those super blue chip, big market cap companies. This company does not have that, but they could one day. And there's also like 3x leveraged ETFs, which we cover all the time on this channel. I even have like I even have multiple videos on my YouTube channel talking about single stock ETFs, talking about leveraged ETFs. I even have posts on my websites talking about margin. So I've covered all these different types of leverage that you could potentially opt for. So if that's something you're interested in, definitely check out my website and my YouTube channel. You need a lot of money to make a decent amount of money on shares. That's not true. Useless on margin. Have you messed around with prop accounts? You do not need a lot of money to make a lot of money with shares. That's just not true. Again, this trade that we made has an annualized rate of return of 63.7% per year. I could pull up a calculator to showcase it a little bit more, but again, I'm in the middle of showcasing this trade that we made on SAP over the past 11 months, alongside a bunch of others, you know. But right now we're talking about SAP, and we were able to identify that it's overvalued based on the monthly 180 moving average and the oversold monthly RSI. We explained that we've previously made bullish trades on SAP successfully, which gives us more confidence going into an investment such as this. Annual profit margins, let's just take a quick browse. They average between a 16%, 12%, 18%, 18% profit margin. These are huge numbers. They have growing revenues. They offer a dividend. Very solid company. Now, where do I expect this company to be going moving forward? As you can see, it's kind of entering that same upward trending price channel that it's had before. Same upward trending price channel that it's had before. And if we look at the previous times where this company's RSI has bottomed out at that 30, it tends to run for extremely long periods of time, right? So if we come over here and look at the previous time where the RSI was as low as it is currently, it took roughly a year for the RSI to make it all the way back to the top. And that's the exact same behavior we're seeing here. While a lot of companies would take maybe 3, 4, 5 months for the RSI to recover back to the 70, this one took a year, and it's on track to do that again. It's going to be over a year before this RSI makes it to the 70. But after it touched the 70, right, This RSI stayed in the air and it continued to grow for 3,441 days before it even considered coming down and touching that support again. And just to show another example of SAP's growth, right? We have the RSI back on its 2002 run, came up, neared the top. Damn. RSI, again, took probably about a year for the RSI to recover from that 30 to the 70, but what happened after it made it to the top? It continued to grow. It continued to grow for 1,700 days before it even considered coming back and touching that support. So I have high hopes for SAP going into the future. Again, they're a blue chip company. They're German based, so it's a great way to gain international exposure on your portfolio, right? Help reduce that standard deviation. When you own a singular company, when you're given two choices, you could own a singular company or you could choose like a US based major market index like the S&P. By opting for the S&P, you are reducing the risk of owning that singular company by as much as 75%. You could then further reduce that risk or standard deviation, remember in finance, these two words are synonymous, by an additional 40% by opting for an internationally diverse portfolio. And SAP is just one company that you could use to help increase your international diversification. And I really wanted to showcase this trade's performance over the past year because it has been since like 11 months since we last covered this company. So I just really wanted to showcase it. And, you know, it's been doing extremely well on top of that, right? It's been doing extremely well. Like you could not have asked for more of a direct route on this investment, right? It was basically from the support. Again, when we made the video, it was $87.07. $87.07. Where are we at? Where are we at? Okay. Within 6% of the bottom, within $4 of the definitive bottom was our video. And then it proceeded to run as much as 55% currently to a high of 65% within a year. Again, providing an annualized rate of return of over 63%. That's blowing any major market index out of the water. That's blowing any hedge fund out of the water. And it could very easily continue to grow. Look, the RSI is at a 57. It's not even near its 70. And as you can see, again, previously on a monthly, even once it peaks out at a 70, it shows continued strength and continues to grow for extremely long periods of time. Again, 3,400 days, 1,700 days. Let's quickly look at the weekly as well. I'll get to your comment in chat in one moment. If we look at the weekly, right? If we look at the weekly, maybe paints a little bit closer of a picture. Again, we're using the same indicators we use for all of our analysis here on this channel, right? We always have a consistent set of indicators that we apply to every company, every sector, every country that we look at, regardless, right? It's like the scientific method. So if we look at the weekly, right, we have our RSI. Makes sense. But let's look at this weekly 20. Like this could not have been more of a direct route over the past year. Even the best of trades, even the most perfect trades that are growing super fast, you're making all this money, right? This is a very direct route that would have been very easy to hold through. You would not have had to wake up in the morning doing these super high risk day trades. Who wants to wake up at 9 a.m. in the morning, look at a low float monitor, jump into some company that's not even profitable, not even paying dividends, that you've never heard of before, that you've never purchased any products before, and take the most high risk position you could possibly take just to, you know, scrape some pennies out, like, and get out 5 minutes later? No. So this could have actually had your money working for you and not the other way around, right? You wouldn't have had to been working very hard for your money, and it would have been very easy to hold, right? So right up off the bottom, it gained as much as 31%. Now there was a 4-week pullback of as much as 8%. What do you do though? You stick to your convictions, you stick to your discipline, you always have a plan, you know where you're going to buy, you know where you're going to sell, right? You know where you're going to buy, you know where you're going to sell. You hold through that. Even the best of trades, not every week is a green week, right? You shouldn't expect every week to be a green week. These pullbacks happen, right? So you saw this pullback of roughly 4 weeks. Okay, what happened the week after that? It made up for all 4 of those prior weeks in a single week. Cool. Week after that, it doubled that and is now pressing new highs, comes all the way back up to the weekly 180 moving average, So even the best of trades, right? You shouldn't expect every week to be a green week, of course. And then lastly, the thing I wanted to note with SAP, right, is we have our weekly 20 moving average acting as a support right here, as it has been for the past month and a half. You have the weekly 20 moving average, and then just under that, at a price point of 125, you have the weekly 180 moving average acting as a support. I would expect both of these price points, 135 and 125, to act as support for this symbol moving forward, and for SAP to continue its growth trajectory going forward. Let's see what's saying in chat. Whoever trade on margin, why do you think such a steep correction to the downside? Looks like previous bullish price channel lows might turn into... Well, you could make that argument, maybe. And if there were to be a moderate pullback, maybe down to this weekly 180 moving average, that would be relatively fair, right? But again, just looking at its growth over long periods of time, this company rarely ever hits its monthly RSI low, and it continues to grow. And it's not even near a peak on that monthly RSI. It's not even close. So monthly's what we had been playing over the past year, and I would be continuing to play the monthly for the next year. And again, once this RSI does peak out, even on the monthly, it continues to run for an additional 3,400 days, 1,700 days. These are like years we're talking. So I wouldn't even be interested in trying to play something like this to the downside. Again, massively profitable, rising revenues. But that's pretty much everything I have to say about SAP for this year. We'll probably revisit them next year. Let's go into the next thing.